Hello students, welcome to AffairsCloud.
We have an app called Careers Cloud which you can go and download it from the Play Store. So after downloading it, you can easily log in using your Gmail ID. Once you have logged in, you will be redirected to a home page which contains 4 tabs beneath it. One is Home, the other is All Courses, next is My Courses, and the last one is a Doubt Session. So under All Courses, you can access various types of courses like Reasoning, Quant, English, and also exam specific courses can also be accessed under this All Courses. If you click this Crack Current Affairs, you will be redirected to this page. So under this, you can see various tabs that are available. So here, if you see, the current affairs will be available in English medium, this under Hindi medium, and here banking awareness, we will provide you the monthly compilation of the banking news and current affairs exam PDF, and also special current affairs, which includes mainly the budget, the union budget, the economic survey, which is very important from the exam perspective. And this is topic wise content where that topics news related to the specific topic, they will be combined together and provided to you. For example, see appointments. All the appointments in that particular month will be combined together in a specific place. And similarly, in case of banking, economic news, so all will be combined together. So this will be easy for you to relate to each other news. Next, you can access the daily current affairs on a daily basis, weekly basis, and also on a monthly basis. So after reading the weekly or the daily news, you can also attend our quiz in order to strengthen your knowledge. Under the monthly current affairs, if you see, there are 2 types of PDF that are available. One is the pocket PDF, the other one is the normal PDF. This pocket PDF will give you a brief content of our current affairs, and this will provide you a detailed analysis of the current affairs. So it is always preferable to read this detailed analysis and then have a go through of this pocket PDF. Next is that we also provide you the PIB news apart from the current affairs. So you can go and access our PIB news on a daily basis from this path. And as I mentioned, this special CA covers very special topics like budgets and economic survey. After reading the content provided in this PDF, you can go and attend the quiz given below. And next is the exam perspective PDF. So if you see IBPS PO mains, IBPS RRB clerk, SBI clerk, so these are all exam perspective PDF. So if you go and check, these PDF will contain around 5 to 6 months of the current affairs, which has high chances of high chances of being asked in this SBI clerk mains exam. So it is very useful to go and read this PDF from an exam perspective point. Good evening. Today we will be covering June 2nd week banking and finance awareness news. Moving to the first news. First news is very important news. Recently the Monetary Policy Committee took place. So we will discuss the highlights of this Monetary Policy Committee. Okay. So recently RBI conducted the 55th Monetary Policy Committee meeting and also the second bi-monthly meeting of this financial year 26. Okay. Overall, if you see, it is the 55th meeting, but for this financial year, it is the second bi-monthly monetary policy meeting. So here, it is headed by, we know that it is headed by the RBI governor himself, that is Sri Sanjay Malhotra, and the other members of the Monetary Policy Committee are Dr. Nagesh Kumar, Saugata Bhattacharya, Professor Ram Singh, Dr. Poonam Gupta, Dr. Rajiv Ranjan. Okay, remember the names of the MPC members, very important. I'll repeat it once again. Dr. Nagesh Kumar, Saugata Bhattacharya, Professor Ram Singh, Dr. Poonam Gupta and Dr. Rajiv Ranjan. These are the members, including the RBI governor. These are the 6 members of the Monetary Policy Committee. So here, if you see in the MPC meeting, they have projected that the GDP will grow at the rate of 6.5%. That is India's GDP. Okay, gross domestic product will grow at the rate of 6.5% for the financial year 26. And also Q1 projection is 6.5%, Q2 6.7%, Q3 6.6% and Q4 6.3%. Okay, here the main thing that you have to remember is 6.5%. You don't have to remember the quarter wise GDP projection, but you have to remember the overall financial year 26 projection, that is 6.5%. So RBI has now reduced the repo rate by 50 basis point. In the previous meeting and now it has reduced by 25 basis point, but now it has reduced by 50 basis point. So overall, if you see, the Reserve Bank of India has reduced the repo rate by 100 basis point. Previously it was 6.5%. Okay, and now the repo rate is 5.5%. Remember this, very important. The repo rate has been reduced to 5.5%, and also the cash reserve ratio is also reduced by 100 basis points. So previously the cash reserve ratio was 4%. Now it has been reduced to 3%. Now what does this indicate? This indicates that more money will be available with the bank now. Okay, generally what is cash reserve ratio? A percentage of the net demand time liability. Okay, net demand time liability is nothing but savings account, current account, FD, RD and all. So the net demand time liability, a percentage of it should be kept as cash, just in the cash form with the Reserve Bank of India. Okay, so previously it was 4%. So say suppose the net demand time liability was, example is 1000 crores. Okay, so previously they had to maintain 4%, which means they had to maintain 40 crores. Now it has been reduced to 3%, which means now they have to maintain only 30 crores. So a reduction of 10 crores is observed. Now where will this 10 crores go? This 10 crores will get into the banking system, and now is the bank will have more money, which means they can give more loan. So there are two things. One is the interest rate will come down because repo rate has come down, and like housing loan, most of the loans, they are linked to the repo rate. So when this rate comes down, when the repo rate goes down, so will the interest rate. Okay, so will the interest rate, loan interest rate offered by the banks. So now loans will be available for lesser interest rate, and also more loans can be provided because more cash will be available with the banks. This is the impact of reduction of the cash reserve ratio. Okay, you should always know why they have reduced it. Okay, after knowing why, you should also know how will it impact. That is very, very important. Next, how will this 100 basis point reduction take place? So immediately will the 100 basis point reduce, or a tranche by tranche? So if you see, 25 basis point will be reduced by September 6th, next another 25 by October 4th, next another 25 by November 1st, and next another 25 by November 29th. So at a go it is not going, so it happens stage wise. Okay, first September, next October, next November, and November 29th. This is how the 100 basis point will be reduced. So now let us look into the various rates. So since the repo rate has been reduced, so will the other rates also, right? So let us look. So repo rate is 5.5%. Reverse repo rate, it is always fixed. Okay, so it is 3.35%. SDF is 5.25%. MSF is 5.75%. Next, cash reserve ratio is reduced to 3%. Statutory liquidity ratio 18%. There is no reduction in that. Next, bank rate is 5.75%. Always remember, the MSF and the bank rate will always be same. Okay, MSF and bank rate will always be same, that they will be 0.25 basis point higher than the repo rate. Okay, so since the repo rate is 5.5, which means the MSF will be 5.75, and similarly SDF also, it will be 25 basis point lesser than the repo rate. So 5.5% is the repo rate and SDF is 5.25. These are all the basic things you must be knowing. Okay, I hope you know all this. I am just revising these things. Next, the consumer price index, that is the inflation. So financial 26, the inflation projection by the Reserve Bank of India is 3.7%. Previously, if you see, they had projected 4%. Now it has been reduced to 3.7%. So this CPI inflation, if you see, it is for the entire financial 26. Similarly, this is not GDP, this is CPI. Okay. Similarly, the inflation projection for quarter wise, if you see, quarter 1 2.9%, quarter 2 3.4%, quarter 3 3.9%, and quarter 4 is 4.4%. Okay. Here also you don't have to remember the quarter wise projection. I am just telling this for your knowledge purpose, but you have to remember the overall financial year inflation projection. Now we saw that the repo rate reduced, right? So how will it impact the home loans? So if you see, there has been an overall reduction of 100 basis point. In this monetary policy committee, 50 basis point, and as in the previous committee also, in the previous monetary policy committee meeting also, it has been reduced, right? So overall reduction is 100 basis point. So say suppose there is a home loan of 50 lakhs and the tenure of the home loan is 20 years, rate of interest is 8%. Then if you see, due to this 100 basis point reduction, the overall benefit that a borrower will get is 3,000 rupees. That is monthly benefit. Okay. So EMI will be reduced by 3,000, which is a good number, right? So this reduction is very useful for the individual home loan borrowers and also those borrowers whose interest rates are linked with the repo rate. Next, gold lending LTV to 85%. So the LTV for the small ticket gold loans, that is especially to improve the gold loan, to facilitate the gold loan even more further, especially in the semi-urban, the rural area and all. Okay, gold loan is one of the major source of funding to various people. Okay, they pledge the gold and use that money for various purposes, for various useful purpose like agriculture purpose or various other purposes. So that is why it is very important that it is very easy for them, and it is a facilitation should also be made easier. So what they have done is, previously the LTV value was 75% and now they have increased the LTV value to 85% for loans under 2.5 lakhs only. Okay, remember the value, not for all loans the LTV has been reduced, only for the loans under 2.5 lakhs it has been increased from 75% to 85%. Now, what is this LTV? LTV is nothing but loan to value. Okay, say suppose you are going, Mr. X is going and pledging his loan, pledging his gold. Okay, the gold value is, say it is 1 lakh. Okay, the gold worth is 1 lakh. Previously, how much would the bank give is, since the LTV was 75%, previously against this 1 lakh worth of gold, the bank used to give only 75,000. Okay, this is what this loan to value means. But now it has been increased to 85% only for loan under 2.5. This is very important. Okay, only for this kind of loan it has been increased. So now if you see, now the same X, if he or she goes and pledge 1 lakh worth gold, now he or she will get 85,000. It is the same gold, but now if you see, since the loan to value has been increased, now for the same gold he will receive 85,000. Previously he used to receive only 75,000. So he is getting more money for the same amount of gold. This is good, right? So that is why they have been increased, so that it becomes easier and so that it will facilitate more people also. So if you see, submit self-declaration. So now if you see, a few draft gold loan rules were released. Okay, I had also discussed about them in the May 5th week. If anyone has missed it, please go and watch that. In May 5th week, we have discussed about the draft gold loan rules. So in that, what they had mentioned that whenever you want to pledge the gold, you have to submit the invoice. This is to ensure that the gold is not a theft one. Okay, so when you submit the invoice, it is a proof that okay, you have only purchased the gold, you are the owner of the gold. But sometimes what happens, we may have misplaced the invoice. In that case, a declaration is enough. That is a self-declaration. That is what is mentioned here. Submit self-declared gold ownership in the absence of the invoice. Next, if you see, the non-oil, non-gold imports have posted a double-digit growth. Okay, so we import a lot of things, right? Our country import a lot of things. In that, if you see, the non-oil and non-gold imports posted double-digit growth. It is good because the overall consumption is growing. Okay, so it is reflecting a strong domestic demand. And also the services export also strong growth trajectory is expected. That is, the services export is very strong in our country. That growth is also expected to be strong. That is, the growth part is expected to improve further. Next, the gross FDI increased 14%. So compared to the previous year, from the 71 billion, it has increased to 81 billion. That is, an increase of 14% was observed in the gross FDI. Okay, but if you see the net FDI, it was just 0.4 billion. Compared to 10 billion in the previous year, that is in financial year 24, the net FDI was 10 billion. Now, why is the net FDI just 0.4 billion in financial year 25 but 10 billion in financial year 24? What does net FDI means? It actually means that the money invested in India, okay, by the outside people, by the foreigners, okay, in the FDI firm, and the money invested by Indians outside India. Okay, people who live in India, that is the big business people in India, they also invest in various business outside India, right? They also open various business outside India. So this difference is the net FDI. So which means that if the net FDI has gone down, which means that more money has gone outside India. That is what it means. Okay. So net FDI, remember, it was just 0.4 billion in financial year 25, though the gross FDI has grown by 14% to 81 billion in financial year 25. Next, the foreign portfolio investors, okay, FPI. Okay, I'm sure you know that there are two types of investment: FDI, foreign direct investment, and FPI. Generally, FDI is for long term, but FPI is they invest only in the instruments, in the financial instruments. It is only for the short term. So they will exit as soon as they get the expected profit. Okay, so here FPI dropped sharply to 1.7 billion because many people had exited the market because they had got enough profit. So these are the reasons behind the drop in the net FDI and the FPI. Next, Indian Forex reserves. So we know that the Reserve Bank of India maintains the Forex reserves of the entire country. So as of May 30, 2025, we hold 691 billion Forex reserves, which is a very good number. And this Forex reserve is enough to cover around 11 months of input. Generally, where the forex reserve goes, it goes for the import and the export transactions, right? So this forex reserve, it is enough to cover almost 11 months of imports and also 96% of the external debt outstanding. Okay, so if you see, we have a lot of, obviously India and many countries in India, private and the public, they would have borrowed a lot of money outside India. Okay, just like we borrow money from the banks in India, okay, they also, the companies and all, the startups and all, they will able to mobilize money, that is raise money from outside India also, because the interest rate offered outside India is quite lesser. Okay, so people will raise money outside India. So that is nothing but a debt, right? So we have to give the money back. So the external debt, if you see, with this money, we can serve almost 96%, very close to 100%. Okay, so 96% of the external debt outstanding we can cover with the forex reserve that we hold. Next is RBI NBFC microfinance institution, 60% from 75%. What does this mean? Okay, what is microfinance institution? It is a type of NBFC. They provide microfinance loans. Okay, so they provide small ticket loans to the various people. So if you see, when the book of the NBFC previously, if you see, they will give 100 types of loans. Just like if you see, let's say they take the example of State Bank of India. They will give home loans, personal loans, vehicle loans, MSME loans, okay, corporate loans, so many types of loans, right? So there will be various types of loans, and maybe home loan constitute 20%, personal loan 10%. So various types of loan will constitute some percentage of the entire portfolio. Similarly, in this case, microfinance institution, if you see, of the entire loans, previously, if you see, at least 75% of the loans should constitute of microfinance loans. Okay, at least 75% of the loans should be microfinance loan. Then only they can be classified as NBFC microfinance institution. Now what happens is that now RBI has reduced. Now RBI is telling it is enough if you have at 60% of your entire portfolio consists of microfinance loans. Okay, previously what it was 75%, but now it has decreased to 60%, which means now they can give loans to various other types of category also. Previously, at least 75% should be given to the microfinance, and remaining 25% only they can give it to other categories. But now if you see, since it has been reduced to 60%, 40% of the remaining portfolio they can give it to any other category loans. So reduce the qualifying asset threshold for the NBFC microfinance institution, that is from 75% to 60%. So the NBFC microfinance institution, if they fail to maintain, okay, they have to maintain 60%, but if they fail to maintain for the 4 consecutive quarters, then they have to approach RBI with the remediation plan. Okay, what can be done to increase it? So that plan should be made and they should approach the RBI. So now what you have to remember here is that new asset qualifying criteria, that is 60%. From 75%, it has reduced to 60%. Next is RBI restricts lending against gold bullions. Okay, so this again we have discussed, as I told you, this discussed in the May 5th week. Okay, so please go and read that circular. So it has prohibited against primary gold assets such as gold bullion. So loan cannot be given against gold bullion. Gold bullions are nothing but gold bars, right? They would have seen a lot of gold bars, right? So in that you cannot give, you cannot provide loans against this gold bars. That is what they have mentioned. Next is private banks see steepest fall in the credit growth to 9.5% in financial year 25. The private bank, they saw a steepest decline to 9.5%. So if you see, over the past 3 years, they have sustained a growth of 15%, okay, of above 15% actually. But now in this financial year 25, the growth has reduced. The credit growth has reduced to 9.5%. Remember this, very important. Next is no plans to raise the foreign ownership cap in banks beyond 15%. So RBI governor has confirmed that there is no plan, that is there is no move to increase the foreign ownership limit beyond 15% in a single institution. So in a single institution, the maximum ownership the foreign entity can hold is only 15%, not more than that. We have launched a new course called Static Banking Awareness course. Now this course will be helpful for students who are preparing for the banking exams and for the regulatory body exams. And also, recently you would have seen Paytm Bank in news frequently. So when an aspirant reads this news, he would have ample number of questions like what is a payment bank, what are the norms for it, and which is the committee that has launched it. So this Static Banking Awareness course lays a foundation to the current banking and finance news. Now, you have to download our AffairsCloud to access this course. Once you have logged into our app,
you can go and click this all courses icon, and then you'll be redirected to this page. In this, you have to go and click the static banking awareness course, and under the details tab, you will be able to see a brief about this course. And under the part tab, it will contain all the contents, all the topics of the contents that are currently available in this course. We are working on this continuously, and this will be completed within 2 months. Under the free tab, you can go and access one content, that is the origin and development content, for free. You can go and read this content and have an idea about this course. After reading this content, do attend the quiz that is also available under the same tab. Now, our team has allocated ample amount of time and resources to curate this content. We have created this content from various books and from various verified websites. Our content is better than any book that is available in the market. This is because we update this content on a dynamic basis. For example, there are currently 39 DRTs that are available in the country now. In future, if one more DRT is created or added, then it would become 40. So we would update this content on a dynamic basis. But in case of books, you have to wait for the next publication for this updated content. Nowadays, a lot of practical questions have been asked in the banking exams. For example, how many public sector banks are available on the stock exchange? Which is the payment bank that is being listed on the stock exchange? So, we try to cover as many practical questions as possible in this course. Apart from this, we also provide you a question bank that will contain around 3000 questions and the previous year questions along with it. We also have a dedicated tab that will release the important RBI notification and the frequent news released by the RBI. You can use this code B15 to avail 15% discount. This is one of the highest discounts that we have offered until now. So do avail this code B15 while you purchase the course.
The next news is about the GDP projection. So this GDP projection is by the World Bank. Remember, World Bank has released global economic prospects for June 2025. Remember, this is a biannual report. So you should know who releases which report and also the frequency of the report. So here this global economic prospects is a biannual report, and in that if you see the GDP projection for India is 6.3% for financial 26, 6.5% for financial 27 and 6.7% for financial 28. So all this projection, if you see, it is lesser than the previous projection. The previous projection was made in January 2025. So compared to that, all the projection has been lowered down, and the main reason for that is growth moderated, reflecting a slowdown in investment on the demand side and a deceleration in the industrial output. That is, industrial output has gone down, investment is also gone down, and that is why overall growth has moderated. And because of this moderation in the growth that has been observed, they have reduced the GDP projection. Even though they have reduced the GDP projection, one thing that has to be noted that India will still remain the fastest growing large economy. Okay, even after this lowering of the GDP projection, India will still remain the fastest growing larger economy. Though the growth moderation is observed, but certain factors are there that will compensate this growth moderation, such as growth in construction and services activity remains steady, and agricultural output recovered from the earlier severe drought condition. So the agricultural output will be good, and also there will be growth in construction and services activity. So there is a moderation due to the investment on demand side and industrial output, but if you see the growth in construction and service activity will help in India growing. Similarly, they have also projected the global, the entire world's GDP projection, that is 2.3% for 2025 and 2.4% for 2026. So here also they have lowered it, and main reason is trade tensions that is going on, and also the policy uncertainty are expected to drive the global growth down this year. So if you see, it is not just, they have not just reduced the GDP forecast for India and for the world, but for majority of the countries. So if you see the growth forecast being cut in nearly 70% of the all economies. So nearly 70% of the countries, the GDP projection has been lowered by the World Bank. And if you see the inflation part, the global inflation, if you see, it is expected to be 2.9% in 2025 and 2026. Whereas in 2027, it is expected to go down. Okay. So global inflation, you have to remember, it is 2.9%. And the global GDP growth is 2.3% for 2025 and 2.4% for 2026. Next, SEBI unveils valid UPI safeguard. Now, what is this valid UPI? See, SEBI, the Security Exchange Board of India, has introduced a new UPI interface payment mechanism named Valid. for all the registered intermediaries who collect funds from the investors. So especially the mutual fund, the brokers who all connect fund from the investors, right? So previously, how is your UPI ID or my UPI ID? It will be like ABC at hdfcbank.in or icicibank.in. Okay, but now if you see, this will have an extra word called valid, so that you know that you are actually sending money to the right person. Sometimes what happens, the fraudsters come in and they might have sent the email ID projecting to be that broker or the mutual fund house. Okay, so that time they will send money to the wrong UPI ID and there people might end up losing money. That is why they have introduced this valid. So now you might be wondering, see, generally you or me, most of us would have invested money in mutual fund through this way. That is, say suppose you have this Paytm money app, okay, and you want to invest in SBI blue chip fund. So what you will do? What will you do? You will register in the Paytm money and you will go and search in the mutual fund house, right? So you will search for the fund. So you will search SBI blue chip fund, and after finding it, you will click the button invest, and then either invest in SIP or the lump sum. After it, you will enter the amount. Say suppose here in this case 5,000, you will enter 5,000 and proceed to pay. Then what will happen? You can choose the payment option. Say suppose you are choosing UPI. So you will enter your UPI ID. You have your GPay. Okay. So what will happen? That UPI payment request will come to your GPay. So you will go to that GPay app and you will approve it in the GPay app. And afterwards, what happens is that the Paytm, the platform, that is Paytm Money, is acting as a registered intermediary and doing the backend UPI mapping for you. So in this case, you might be wondering that in this case, you do not see any UPI ID. Well, you enter your UPI ID, but you do not see any Paytm UPI ID. So here, if you see this Paytm Money, it is acting as a registered intermediary. The backend UPI mapping, everything will be done in the backend. So that will not be visible for you. Okay. In this case, okay, fine. This UPI concept itself is not there. That is, UPI valid concept itself is not applicable. But there are cases where what happens is that the mutual fund or the broker, they might not be as big as Zerodha or Upstocks or this Paytm Money. So they might be very small. So what they will do is they will send the UPI ID. Okay, they will send that. They will tell that if you want to invest in this, I will share you the UPI ID. You send money to that, and then that amount will be invested into those funds. Okay, there are genuine ones. Of course, not everyone is non-genuine. There are genuine ones and non-genuine ones also. So what happens that most of the genuine ones are affected by the non-genuine ones. So if you see what happens, the fraudsters, they share fake UPI ID like HDFC funds at OKSBI. So this all looks genuine, right? So people tell, okay, this is genuine, I'll send money to this, and they will send, but they will end up losing the money. So they will send fake UPI IDs like HDFC funds at OKSBI over WhatsApp, Instagram, or even running fake apps, and people end up sending money to them. So asking investors to send money directly, and then they will disappear. So to avoid this situation only, the UPI ID will feature that exclusive at valid. Okay. So all the SEBI registered. So the fraudulent will not have access to this at valid UPI ID itself. When they try to create UPI ID, they will not be able to create at valid followed by the bank. Okay. So they will not have access to this at valid. So only the SEBI registered, only the valid, only the authentic intermediaries, they will only have access to this at valid. So the fraudsters cannot now unnecessary take the money from the innocent investors. So UPI ID will feature the exclusive at valid handle for all SEBI registered combined with the bank name to ensure easy identification by the investors. Apart from that, apart from the at valid, a green thumbs icon, okay, green thumbs up icon will appear alongside these UPI handles, serving as a visual indicator to assure investors of the payment request authenticity. Okay, so you will have at valid and the green thumb. So with green thumbs up. So from this you can ensure that this is a valid one. This is an authenticated UPI. Apart from that, one more thing the SEBI has brought in. That is called the SEBI check verification tool. So what is this? It is a portal. Okay. Here what you can do, you can enter the UPI ID, whatever UPI ID the person has shared, that broker or the mutual fund house has shared, you can enter it manually, confirming the bank details. So when you enter it, the account number, the IFSC code, the bank name also, that everything will be appeared. So now you can also double check. Okay, first the valid name will be there along with the bank name. Okay, the valid word along with the bank name. Next, green thumbs up icon will be there. Now you can also check it in the SBI check verification tool to ensure that it is the actual, they have the actual bank name, the IFSC code, everything can be checked. Okay, so this is the new thing that the SEBI has introduced. Next, ICICI Prudential Mutual Fund. So this asset management company, they have renamed two equity schemes, that is SBI Prudential Blue Chip Fund to SBI Prudential Large Cap Fund, and ICICI Prudential Value Discovery Fund to ICICI Prudential Value Fund. Okay, so these two names will not be valid from 16th June 2025. Okay, these two schemes will not be there. Instead of that, these two schemes will be there. Okay, this is the new name of the mutual fund schemes, and this is valid from 16th June 2025. Next is the UK-based financial technology company called WISE. Remember, WISE, UK-based financial technology company. It has received RBI's approval to operate as the payment aggregator cross-border for export transaction. Remember, payment aggregator for the cross-border, and that too only for the export. Sometimes what happens that sometimes the payment aggregator, they would have acquired approval for the payment aggregator cross-border import or export, and few people import and export. So in this payment aggregator, this WISE payment aggregator can be used only for the payments involving export transaction, not for import. Remember, only for export related transaction, this payment aggregator can be used, and for that they have received approval from the Reserve Bank of India. Next is about the acquisition. So Central Bank of India, they have acquired 25.18% stake in the Mumbai-based Future Generali India Life Insurance Company. Okay, in this Future Generali India Life Insurance Company, Central Bank of India has acquired 25% stake, and also it has acquired 24% stake in the Future Generali India Insurance Company. Okay, remember this 25% stake is in life insurance company, and this 24.9% is in the entire insurance company itself. Okay, remember this small difference, 25 in the life insurance and 24.91 is in the insurance company. And apart from that, if you see the LIC, they have raised their stake. Okay, that is, they have raised the shareholding in the Dr. Reddy's laboratory. This Dr. Reddy is Hyderabad-based pharmaceutical company. In that, from 6.2%, the stake has been increased to 8.21%. Remember, now LIC holds a share of 8.21% in the Dr. Reddy's laboratories. Next is Flipkart. They have secured NBFC license from the Reserve Bank of India. So this is non-deposit taking. Okay, non-deposit taking NBFC, which means they cannot accept deposit, but they can lend money to various people. So to offer loans or credit directly to the customers, but not allowed to take deposit. This type of license has been acquired by the Flipkart from the Reserve Bank of India. Next is AU Small Finance Bank, Jaipur based. Remember, Jaipur based AU Small Finance Bank. They have partnered with the IFC World Bank arm. Okay, so IFC, that is International Finance Corporation, it is an arm of World Bank. So they too have partnered. What is the purpose? So AU Small Finance Bank will integrate the climate risk consideration into its various parts. Here, climate risk is a very, very important thing, right? So due to climate risk, what happens? The business that the people have borrowed money, that might have failed. When that business fails, then the people will not be able to repay the loan. Then what happens? It becomes NPA. When more NPAs pile up, it is the bank who eventually gets affected. So it is very important to inculcate the climate risk. Okay. So we have to inculcate the climate risk consideration into the governance framework, strategic planning, risk management process, and environment social governance disclosure. So in everything, this climate risk consideration has to be done. So what will IFC do? So IFC, if you see, it will be a climate risk advisor of the AU Small Finance Bank. So it will support the AU Small Finance Bank in addressing the rising need for financial institutions to quantify, disclose, and manage climate related financial risk. Okay. So we have seen market risk. Okay. We have seen credit risk, operational risk, all these type of risk we have seen. But we have never addressed the climate related financial risk, right? But now it is very, very important to address that also. And for that, if you see, this IFC will be the climate risk advisory of the AU Small Finance Bank. Remember this is a very good unique news. So this might come in your objective question. So please do remember. Next is Colombo-based DFCC Bank. Okay, it has been the first foreign corporate entity to list the green bonds. Remember, to list first foreign corporate entity to list green bonds worth 2.5 billion Sri Lankan rupee. 2.5 billion Sri Lankan rupee. Okay, where was this listed? It was listed in National Stock Exchange, International Exchange. Okay, this was listed in the NSE International Exchange, which is in the GIFT City. So where will this money be put into use? That is, they will issue green bonds. Okay, the investors will buy the green bonds. In turn, the entity will receive 2.5 billion Sri Lankan rupee. Now, where will this 2.5 billion Sri Lankan rupee be put into use? It will be used to finance solar energy projects, support Sri Lanka's goal of 70% renewable energy electricity by 2030. Okay, support Sri Lanka's goal of 70% renewable electricity by 2030. Remember, DFCC Bank, it is a Colombo, Sri Lanka based bank, first foreign corporate entity to raise 2.5 billion. Remember the amount also, very, very important. 2.5 billion Sri Lankan rupee. Next, SBI Mutual Fund, JP Morgan India and SBI Life Insurance Company. Together, they have acquired 1.8% stake in the Bajaj Finserv. Okay, in this company, in this fintech company, they have acquired 1.8% stake in Bajaj Finserv. Okay, the amount of this 1.8% is 5,506 crores. Okay, the value of this transaction is 5,506 crores. Next, Grow Mutual Fund, they have launched Grow Nifty India Internet Exchange Traded Fund. Remember, Grow Nifty India Internet Exchange Traded Fund. It is India's first Nifty Internet ETF targeting digital economy. So, what will this ETF do? Exchange Traded Fund, they will mimic an index. Okay, that index is Nifty India Internet Index. This fund will track the index called Nifty India Internet Index Fund. So, where will ultimately the money get put into invest? Okay, generally what will do, ETF, mutual fund or anywhere, the money will in turn be put into various stocks, right? So, here in what type of stocks the money will be invested? So, here if you see, the money will be invested in turn in various internet first business across sectors. So, that is in e-commerce, fintech, online travel, digital payments, stock broking, entertainment, where the internet plays a vital role. So, in all these type of business, internet is the main reason for the business to grow. So, in those kind of business, the money will be invested. Okay. And what is this index? This Nifty India Internet Index, if you see, they invest money across 21 listed companies. And these 21 listed companies are across 6 broad sectors. What are the 6 sectors? E-retail and e-commerce, financial technology, internet-enabled retail, stock broking, digital travel, online media. So, these are the 6 broad sectors. Into these, the money will be invested. Okay, remember the fund name Nifty India Internet Index, and that will be mimicked by the ETF that has been launched by the Grow Mutual Fund. Next is RBI has granted scheduled status, okay, to a cooperative bank, that is Pune based Vishweshwar Sahakari Bank Limited. Remember, Pune based Vishweshwar Sahakari Bank Limited, they have received a scheduled status, that is they have been granted scheduled status by the Reserve Bank of India. So, this bank is one of India's leading urban cooperative bank. So, since they have received now the scheduled status, now they will be having access to the repo operations, also to the marginal standing facility operation. Through all these operations, they can get money, that is borrow money from the Reserve Bank of India. Next, SBI paid a dividend of amount 8,076. Remember, 8,076 crores has been paid as dividend by the State Bank of India to the Government of India. Okay. So, this is for the financial year 25. It is because Government of India, they hold a share of 57.43% in State Bank of India. Okay. The stakeholding, that is the shareholding of Government of India in State Bank of India is 57.43%. Because of that only, they have received such a huge dividend, that is 8,076 crores. Next is Poonawalla Fincorp Limited. It is an NBFC. Poonawalla Fincorp Limited, they have launched fully digital business loan 24/7 product for the MSME. Okay, so this business loan is exclusively for the MSME. So it is, you can access digitally, which means the MSME which want to apply for loan, they can apply for the loan via the application itself, that is via the app or the website itself, and the process also will take place online itself. That is, the Poonawalla Fincorp, they will have access to the various statements of the MSMEs, like the IT assessment, that is they would have done IT assessment, right? They would have filed IT, right? They will have IT access to the IT, okay, income tax, and also the GST portal. So from that itself, they will get the GST returns. So all this, if you see, it will be done digitally and also processed as soon as possible. So this facilitates instant onboarding and loan approval, ensuring fast and paperless dispersal. Next is SEBI issues new ESG depth framework. What is this ESG? ESG is nothing but environment, social and governance. Okay. So SEBI has issued to govern the issuance and listing of the environmental, social and governance debt securities. Okay. Previous one we saw there's the green bonds. Okay, that is the Sri Lanka, they plan to list their green bonds. That is the first foreign corporate entity to list the green bonds in our stock exchange, that is international exchange. Similarly, there are also various kind of bonds called social bonds, sustainability and linked bonds. Okay, for to govern all these bonds. Again, the money raised from this will be used for social projects and for sustainable related projects and all, right? So, to govern these bonds, to govern the issue of bonds, to everything, there should be a framework. A framework now has been introduced by the SEBI. So, what all bonds will be covered by this framework? First, social bonds. So, social bonds, the money raised from the social bonds will be used in various projects such as affordable housing, healthcare, education, employment generation for the entire social welfare of the economy. There, the money will be used. Next, sustainability bonds. So, this is a combination of both environment and social. So, environment related projects also the money will be used, and social related projects also. Third is sustainable linked bonds. Okay, we'll cover the sustainable linked bonds in the next slide. For now, you have to remember that these are the three bonds that are covered under this ESG depth framework: social bonds, sustainability bonds, and sustainability linked bonds, which is not covered the green bonds. The green bonds are covered under a separate framework called SEBI's Green Debt Security Framework. That is not covered under this ESG framework. This is very important point that you have to remember, that what are the bonds that are covered under this ESG debt framework and what are the bonds that is not covered. So, this is effective from June 5th, 2025. Okay, this debt framework, it is already been put into use, that is, it is effective from June 5th, 2025. So, what is green bond? What is sustainability? It might be a little confusing, right? So, green bond, if you see, it has a specific purpose. So, in the previous one we saw, right, the Sri Lanka's bank is trying to raise that green bond, that will be put into solar projects. Similarly, any bond, any company, when they are trying to raise that fund, they will tell specifically, okay, in the brochure itself, that where will they put this bond, into a solar project or a different wind project. So, it has a specific, okay, so finance specific green or environmental project. But in case of sustainability linked bonds, they encourage overall sustainability. Like this, they will tell that this money will be used to reduce the carbon emission. So, there are multiple ways to reduce carbon emission, right? Instead of using fossil fuel energy, they can use renewable energy. Through that, carbon emission will be reduced. And also, instead of using normal petrol vehicles, company might use EV vehicles. In that also, carbon emission will be reduced. They don't have specific solution, but overall, they're telling that we will reduce. Next, use of funds is fixed. That is, they will tell we are going to use it for the wind project, which will cost this much. So, it is specific, solar or wind or water, whatever it is specific. But here it is flexible. It can be used for any purpose. So, it is here flexible. Next, penalty, no penalty if the company doesn't improve the ESG metrics. But here, if they do not, okay, if they are telling that they are going to reduce it by 30%, suppose the carbon emission is some 1000 and they are telling that we will reduce it to 700, okay. But if they fail to reduce, yes, there is a penalty that they have to face. Okay, in this case, no penalty if the goals are missed in the case of green bonds, but in case of sustainability linked bonds, yes, they do have a penalty. Next is monitoring, tracks whether funds go to the approved green projects or not. Sometimes what happens is that the companies, they raise the money but use it for some other purpose, right? So, diversification of fund takes place. So, in the green bonds, monitoring takes place whether the fund is going to be utilized for the purpose that is listed in the brochure or not. But here, sustainability link, it tracks ESG key performance indicators like CO2 emission, energy usage. So, here it is overall. Again, not any particular purpose. The example of this is NTPC green bond used only for solar or wind projects. Here is the JSWST SLB, which is linked to the carbon emission reduction by 2030. So, I hope you don't have this confusion between the green bonds and the sustainability. Green bonds, they have a specific use, but sustainability, it is not specific use, it is generic only. They try to reduce overall any of the factors, okay, from environment or social or governance, from overall improvement of this ESG, not any particular thing. So, SLB are the bonds where the terms are linked to the issuer's sustainability performance, typically through the ESG, that is environment, social and governance goals. Let us look into the depth framework. Okay, so framework, if you see the eligibility criteria, so who all can raise these instruments, or the instruments for if you want to raise the bond, then what is the eligibility criteria for those instruments? So, these instruments are required to comply with the recognized international standards. Okay, if you want to raise the bond in the stock exchange, if you want to get money from the people through these bonds, then those bonds, they have to comply with the standards set by the international organizations such as the International International Capital Market Association principles, Climate Bond Standard, Association of Southeast Asian Nation Standard. So all these regulatory bodies, right? All these international standards has to be complied by the instruments. Like social bonds must fund projects such as affordable basic infrastructure, access to essential services, employment generation, food security. This is where the social bonds money should be put into use. Next is disclosure requirement. What should be disclosed to the public? That is to the investors who are investing their money. So before issuing, what should be done? The objective. What is the purpose of the bond? Target beneficiaries and the project selection process. All this should be mentioned. Okay. Post issuance. That is, you have raised the money, mobilized the money, started using the money. So after that also investors should have access to the annual reports on the fund utilization. That is the money that has been raised, where it has been put into use. Unused proceeds. So what if the entire money is not put into use and remaining money is there? That remaining money, where it has been put into use. And the impact metrics. So you have invested money. Does it have impact on the environment? Does it have impact on the governance? So what is the impact? So all this has to be given to the public or the investors. Next, third party review. Okay, bonds can be labeled as social sustainability or SLB only if proceeds finance projects aligned with the defined ESG standards. Okay, now the company is telling that I have put the money into this, but who will verify it? There should be a third party. Okay, there should be a third party that should verify and make the disclosure. Okay, they are telling that they have invested this and they are telling that it will impact the environment. This is true. We have verified. They have put the entire amount into this only, and this is a very useful project. It will have a good impact on the environment. Such verification should be done by a third party, and that result should also be made published to the investors. Okay, so these are the things that are mentioned under the depth framework. Next is NSE Sustainability, that is a wholly owned subsidiary of the NSE Indices Limited. Okay, this NSE Sustainability will launch ESG ratings for the listed companies. So if you see, just like you have ratings for like say suppose if the company is planning to raise a bond, okay, some bonds, there will be a credit rating agency that will provide a rating, right? It will be A or AA plus or AAA. Such rating will be provided, right? Depending upon their performance, depending upon whether they were able to service the debt. So all this will be considered. A rating will be provided by the credit rating agency. Similarly, this NSE Sustainability will provide ESG rating. That is whether they comply the environment rules, sustainability, governance, whether that is all complied by the company. That rating will now be provided by the NSE Sustainability. Okay, so to provide stakeholders, including investors, business, regulators, and the public with accurate, comprehensive, and unbiased evaluation of the corporate sustainability practices. Now, until now, only the profit, only the entire balance sheet was closed, but was checked. Okay, was given importance. But now, even the sustainability practices that are followed by their company are also given importance, and depending upon that, a rating will be provided by the NSE Sustainability. So this will have an impact on the investors, because investors also want to invest in companies that are socially responsible. That is, they give in return something to the environment. They do not destroy the environment. They improve the environment. So that plays a vital role nowadays because of the climate change. So they give importance. So ESG ratings do matter nowadays, and that rating will be provided now by the NSE Sustainability. Next is L&T. If you see, L&T, they have planned to raise 500 crore ESG bond issuance. They have planned to raise 500 crore through the ESG bond issuance. And this, if you see, this is the first Indian corporate to issue such bond. So now only the ESG depth framework has been, maybe 1 or 2 weeks back only, ESG depth framework has been put into effect by the SEBI, and now L&T plan to issue this ESG bond and raise 500 crores via this ESG bond. Okay, so this is the first Indian corporate to issue this ESG bond. Remember this, very, very important. So L&T with the partners with the HSBC Bank. Okay, this will be the lead manager. That is, this will help with the process, entire issuance process, everything. The HSBC Bank will help with the L&T. So L&T and HSBC, they together will raise the 500 crore. Remember this, very important, 500 crore ESG bond, L&T company.
Thank you for watching the session. I hope you had enjoyed it. We're also available in Telegram under the name AffairsCloud_official. We also have an Instagram handle. Thank you.